Look, don't get me wrong. I'm happy the stock market's up over the past 3 weeks, but I'm not so comfortable with the way it's going up. So how does it look going into next week? I'm trying to find some inspiring words to share with you today, but the stock market is moving up in a listless, lackadaisical way. That doesn't instill a lot of confidence. As you can see from this chart, since the stock market bottomed out about 3 weeks ago when we had this big capitulation, the trend is generally up, but it's pretty ragged looking. And more recently, we had a fairly decent bottom confirmation here, and I'll talk about that more right now. As you can see from this bottom analysis, we had a very strong bottom forming indicator here. We actually had one back here as well. Very high bottom forming indicator at 100% and a confidence level near 100%. That's a very strong bottom forming indication. And then what happened recently? Well, last Wednesday, we had a very high bottom confirmation level and a very high confidence level. So we've had a confirmation here. Does this mean the stock market's going to go up from here? Not necessarily, but it's a good indication. We'll have to wait and see what happens next week. I don't always show this table, but I think it's important to kind of show what's going on with the trend here. There are basically two columns, equity risk level and what I call equity opportunity level. You want this number to be as small as possible. You can see it was in the green back here. And you want this number to be as high as possible. You can see it was also in the green here. Well, this is trending the wrong way. This is going higher. Now, when it gets above 80%, that's not a good thing. In fact, you can see back here it was at 75, and before that it was well into the 80s. This one, you want it to be, in the 60s, high 60s, 70s, high 70s are even better. But you can see it's at 58. This is not trending in a good way, so we'll have to keep an eye on this. What about equity versus safety? Well, I keep this as a reference. August 17th, the market actually had a fairly healthy look to it. Now, we all know it went lower after that, but this is what a somewhat healthy market looks like. You want the highest risk equities, small cap and NASDAQ, to be 1 and 2, and they were, and the lower risk equities to be 3 and 4, and they were. The problem here is that we have an unhealthy treasury market. You would like to see 20-year treasuries or even longer ranked up here at 5 and 6, or at least a little bit higher than the bottom, but this is an unhealthy treasury market. And then by September 30th, we had an unhealthy equity market, and you can see cash, T-bills, and gold ranked 1, 2, and 3, and all the equities at the bottom. And then a week ago, prior to this past Friday, we had a somewhat healthy equity market with the Dow ranked 1, small caps 2, SPY 3, and the NASDAQ 100 4. But still, the treasury market showing an unhealthy state of being. And then let's go back to this past Friday, November 4th. Dow ranked number 1, small caps ranked number 2. I'd really like to see this flip the other way. But what's interesting is gold is number 3. Not sure where that's coming from. S&P 500 number 4, but you can see the Qs have dropped to number 8. Now look, a bunch of NASDAQ 100 stocks had pretty significant drops in the last couple of weeks. Facebook down 20+%. Amazon dropped, Microsoft down, Apple down. They're all down. So I'm kind of not surprised in a way that the NASDAQ 100 has dropped so much recently. Let's take a look at the buying and selling pressure. The Dow Jones Industrial Average, which has been the sort of leader out of this, which is not what you want to see coming out of a bottom, has been rallying. And you can see that the buying pressure, this gray line, was above the selling pressure, the orange line. But you can see they flipped recently. S&P 500, a little weaker looking. You can see the rally's not as strong here, but the buying pressure was above the selling pressure here. But again, flipped recently. It is heading in a direction I'd like to see it go, though. What about the NASDAQ 100? Well, you can see this is looking much less healthy than the Dow or the S&P 500. Started a nice rally here, but it's been failing recently. And you can see that in the buying pressure, which was above the selling pressure here, and then has declined as well. But it looks like it's trying to come back. We'll have to wait and see what happens. Now, of all of these indices, the Russell 2000 small cap index looks great. You've had a very long rally here. Not great, but it's at least upward. And then the buying pressure has moved way above the selling pressure and is still above the selling pressure here. And the 1 month trend has a very nice increasing trend line here. So this looks really good. I always like to look at the Ark Innovation Fund, ARKK. And why do I do this? Well, because these stocks are really much higher risk than the bigger indices. These are new and upcoming companies in general that are much riskier places to have your money. Now, Cathie would disagree with me, and I agree with her in some senses. These will be the disruptors at some point. We're just not there yet. But I like to look at this because it's an indication of risk appetite. And you can see, much like the Dow and the S&P 500 and the NASDAQ, the buying pressure was above the selling pressure here. And then they flipped over more recently. You can see the price declining. I throw this up there partially for interest, but partially for measuring risk in the market. So if we look at the best ranked sectors, and you notice these don't go 1, 2, 3, and 4, and that's because in the actual model there are 3 parts of XLE in there, and we discount them by 1 standard deviation and 2 standard deviations. So if the energy sector is strong, we can get more than 1 part of XLE in there. So that's why this goes from 1 to 4. So don't get thrown by the fact that this doesn't go 1, 2, 3, and 4, because right now XLE is ranked 1, 2, and 3. But if you look at this, energy is ranked number 1. Aerospace defense is, would call it second place here, even though it's coming in at 4. And industrials are number 5. Financials are ranked next. No surprise here. Rising interest rates, these banks are going to make oodles of money. And then you can see the Dow, which has been the best performer of the indices, is ranked next. Now, I don't like the fact that cash is still way up here in these top best sector rankings, because cash being ranked high means that the market is not in a good place. And then you can see all the way down here at the end, we've got intermediate treasuries. Now let's take a look at the bottom ranked sectors. So here's the worst sector rankings. So innovation, ARK at the bottom. It hasn't done well. No surprise here, 20-year government treasuries near the bottom, technology near the bottom, and so on. Then here again we have the intermediate treasuries. So this is clearly an unhealthy treasury market and still showing a lack of appetite for risk. Let's take a look at gold, which has really moved up recently. So clearly selling pressure above the buying pressure, and it still is here, but the price just shot up in the last few days. So we'll have to keep an eye on this and see what happens. I don't think gold's going to go a lot higher. I don't see what the impetus is, unless there becomes a lot more geopolitical risk in the landscape, and then gold could go through the roof. What about Bitcoin? Now, if you've been watching my previous videos, I've been talking about the fact that Bitcoin has been holding up really, really well for quite a while here, as long as the small caps, in fact. So this tells me that there's a push-pull tension going on here between the bulls and bears, and this thing is going sideways to slightly up. So according to Cathie Wood,
if you look at crypto, so Bitcoin has been incredibly stable since its June lows. In fact, the volatility, 30-day volatility of Bitcoin has dropped below the 30-day volatility of the S&P and the NASDAQ. And you'll see that in our Bitcoin Monthly. We're publishing it this evening. And there are some very provocative charts in there that are suggesting we're in a bottoming period for Bitcoin. Now, we do have to be careful. We've seen a nice base develop here. And as many of you might remember from our Tesla call in the day, I said, you know, the base, whenever you have a very long base, and in the case of Tesla, it was 5 years. But whenever you have a very long base, something big is going to happen, because that's the bull and the bears dueling each other. In the case of Tesla, our bet was we'd have a big upside breakout, and we did. In the case of Bitcoin, we would expect the same. The base is not nearly as long. And a lot of the on-chain analytics are supporting that point of view.
And I agree with her on this. I think there's potential here. The longer this goes sideways and consolidates over a longer and longer period of time, the move is going to be up or it's going to be down, but it's going to be big the longer this goes on. So where does all of this leave us? Right now, based on what I'm seeing in the markets, I think there's a little better than a 50-50 chance that the stock market keeps going up, but we'll have to wait and see how that plays out. There's no crystal ball. The markets don't like uncertainty. And with a hawkish Fed and the election results not resolved until next week, we could be in for some more headwinds, or not. I'm Calvin Rose, and thank you for watching today. If you liked this video and you felt like I added some value, please hit the like, subscribe, and notification bell so you won't miss an upcoming episode of Invest Smarter. That's all for now. Hey, thank you for watching. If you enjoy these videos, there's several ways on Patreon for you to support the channel and access exclusive content, including special posts on the markets, educational materials about how to select investments and manage your portfolio, and at the investor level, you'll have full access to our natural selection stock rankings so you can evaluate individual stocks or market sectors that fit your investment style. Check out the link at the pinned comments below, and thank you for your support.